Hey, welcome back to Everyday Economics. It's the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, publisher of the Center Square. Everyday Economics is brought to you by the Center Square. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording today's episode on Tuesday. This is June 17, 2025. And joining me, as always, the Natalie dressed. Man, it looks like you're on vacation. It's Dr. Orphe Divounguy. He's got for those of you who are listening to us and not watching this, he's wearing a Hawaiian shirt. He's got a baseball cap on and a cobalt blue sweater over his shoulders. Man, got it put together today, oh. How are you?
Doing well, thank you. And I'm not on vacation yet. I'm just traveling again, but yeah, I'm going on vacation for a week or so.
Well, I appreciate that.
So I'm excited about that.
Way to get in the mode. So every Monday you drop a column. You know, it's the week ahead. It's the Everyday Economics column. It runs at thecentersquare.com. We have a Fed decision this week. That is kind of like the news that's obviously occupying everybody's focus and attention. Got a lot of things going on in the world right now. Some things are going off in the world right now. What are you anticipating? We're going to focus on just the things in the domestic. I mean, the couple of things that you pulled out: unemployment claims, held at 248,000. That's as of the week of June 7th. It was a marking of an 8-month high. But you wrote, more telling is that continued unemployment claims have surged roughly 7% over 2024 levels, with only half of U.S. industries now adding jobs. If this trend continues, you write, we could see unemployment hit or exceed the Fed's March projection of 4.4% by summer's end. Talk about the data. Talk about what you think is coming up right here.
Well, I mean, we could just start by talking. Since we're doing this week ahead show, why don't we talk about what's happening today? And what's happening today, even before the Fed's decision, is exactly what I predicted in the column, which is the consumer is pulling back. The savings rate is rising, and now we have a retail sales report that dropped this morning, just a couple hours ago, and that shows what? Well, it shows that the deceleration. Let's not even call it a deceleration. Let's call it a decline, where retail sales actually fell. Retail sales slumped in the month of May, and so that's. I mean, this is happening right now. We're seeing it. We're seeing the consumer pull back. The economy is slowing. The unemployment rate is still at 4.2%, but is set to increase. Right, all of our leading indicators are pointing to an increase in the unemployment rate. As for the Fed is going to probably deliver another. They're probably going to hold rates steady, unchanged again tomorrow. But essentially, we have inflation below the March SCP, the March projections for 2025. And the unemployment rate could actually increase and potentially even exceed what the Fed had projected for the year. And so that's kind of my call here. I think the economy is slowing faster than anticipated, more than anticipated. And inflation so far has been somewhat muted. The tariff impact on inflation has been somewhat muted.
Can we talk about that a little bit? So just to put the numbers into it, because I think it's really interesting, and it's just like straight from what you wrote. The latest PCE inflation reading came in at 2.1% for April, well below the Fed's March projection at 2.7% for 2025. Core PCE inflation, the Fed's preferred measure, you wrote, sits at 2.5%, also below their 2.8% forecast. These numbers suggest the Fed's restrictive policy stance is working perhaps better than expected.
Yeah, I mean, it's restrictive. It's slowing down the economy. It's bringing inflation under control. The problem, of course, is that the Fed is sitting on the sidelines because of uncertainty around the impact of tariffs. But it's very possible that although goods inflation can pick up, due to the tariffs, right? At least in the near term, that all of the disinflation coming from other things like services, for example, coming from the cooling housing market, for example, could actually offset, or at least partially offset, the uptick in prices coming from those goods that are being tariffed.
So what do you expect next? I mean, what's the next piece of data that you're looking toward,
Well,
to kind of make sense of sort of where this is headed? I mean, I think I think you've said this, and I think you've been saying this for the last few weeks. You do not expect the Fed to make any kind of a decision tomorrow that it's a stay put scenario, right? I mean, there's not going to be any movement tomorrow. What is the next big piece of data or information that you're looking toward, that's going to influence, whether the Fed does make a move?
I mean, look, we're going to get the PCE towards the end of the month, so we got to think of another 2 weeks before we get the PCE. June 27th is going to be the report. So it's actually next week. It's not 2 weeks. It's next week. So we're going to see that number come in. We're going to try to look at which parts of that index, which components are moving higher, and which ones. And I ultimately look. It's pretty clear to me that demand is slowing, the economy is slowing, and that the uptick in oil prices potentially coming from the conflict that's going on right now,
Yeah.
an uptick in prices due to tariffs, for example, is actually going to cause the economy to slow even further. And so the big question for me is, will the Fed tolerate a increase in the unemployment rate? Because they don't want inflation to start moving higher. I think, first of all, I think it's misguided to think that that inflation is going to pick up when at a time where demand is really slow, where the labor market is cooling, where basically inflation expectations are actually falling.
Mm-hmm.
Inflation expectations are actually lower. Yes, there are consumer surveys like the Michigan survey that shows inflation expectations have increased, but even in the last month, those numbers have actually come down again, right? And so consumers do not expect inflation to increase very substantially over the next year. The market participants do not expect inflation to increase substantially over the next year. Policy is tight. I really doubt we're going to see a big resurgence in inflation. I could add maybe one last point. Wage growth is very subdued because hiring rates are extremely low, right? Lower than they've been in a decade. And so when wage growth remains is easing and is very much under control, it's unlikely that we'll see a pickup in consumer prices, an acceleration in consumer prices that's driven by consumer expectations, inflation expectations.
Well, I appreciate your thoughts as always, Dr. Orphe. For Dr. Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics, wherever great podcasts are hosted, and make sure you listen to Orphe Divounguy and me each week on the Center Square Radio Hour.